everybody knows oil grabs the headlines. So you said a couple times higher oil prices, and you also said higher natural gas prices in North America. The fact of the matter is, in my view, there's a strong demand for all forms of energy, including renewables and including all that, but it's a hydrocarbon, high strong demand, right? You have seen for 6-9 months in Europe and in Asia, the prices of natural gas, LNG, and coal have been at a significant premium to oil prices. All of these energy commodities are in strong demand. So it's not just oil, and especially that's important for offshore development. Right? A third or a half of the opportunities are going to be offshore LNG. So the breadth of this, and I was struck by, in 2020 and 2021, demand for energy, oil, gas, coal, and power, electricity, in China grew throughout the pandemic, right? The rest of the world, we all know, all those things significantly ratcheted back. That didn't happen in China. And then, right, what you also saw in 2021 was there were power outages. There was rotating reduction in power in China because of the lack of availability of power for industry purposes. So that's just shows the breadth of how big this energy shortage is, and therefore I think what the breadth of the opportunity is, and therefore how much demand there is that's unsatiated that therefore will drive activity. So it's not oil, and we all talk about oil because it's always the headline grabber though. Get out of that habit. Natural gas prices, and of course that also means though the United States, North America is competitively advantaged. Energy prices in North America are different from the rest of the world because we do have an abundance. We have a good supply of oil. We have plenty of coal. We have an overabundance of natural gas. Natural gas at $7 is a lot cheaper than it is at $30 in Asia and at $30 in Europe. So the prices, so right, $30, the equivalency is 6 times. That's $180 oil. That's the energy equivalency. That's what coal and oil are going for in Asia and Europe. So that's an interesting driver that gives a lot of oomph to the demand that I think that really comes for energy and makes the opportunity.
Yeah, agreed.
Kuppy, any comments on energy before we kick it off to petrochemicals?
I mean, it's just the symptom of everything we're going to talk about. There's been no investment, and when the demand comes on, especially when they stimulate the demand, I think it's one thing on the energy I want to talk about, and I think early to pick up on this, is that normally in a commodity cycle, the price goes up and you see the demand pull back. And that's how you eventually, supply comes, demand pulls back, and you get to a new equilibrium. This time, you see governments around the world giving out oil stimmies, giving out fuel stimmies, cutting the taxes on gasoline. So you don't have this demand response in a normal, counter-cyclical sort of way. And then on the supply side, governments are actively telling people not to drill. They're saying there's going to be carbon taxes, there's going to be excess profits taxes. I mean, if you think there's an excess profits tax, why are you going to drill a well? So I think the government's interfered in the normal cycle, which is going to make the cycle overshoot. And I think that's something that people have really not understood.
Well, in commodity businesses, the cure for high prices is high prices. Everybody knows that. And the reason is because high prices bring high profits brings in new capital. There's reasons to think that that is a cycle that is broken. New capital coming in to drill oil wells or gas wells is not nearly the same thing. Do I really want to own something that has a sunset potential risk to it? In addition, the services part of the business, when you talk about offshore boats, rigs, when you're buying a 30-year asset, you have no idea what asset to buy because you don't know what the power source is to generate that. So you can't build if you want to build because you don't know what to build. So therefore, the supply side and the service response, I do think, will also another constraining factor that will limit the ability to spend enough money to bring on enough new production to oversupply the market. So there's an extended period that I think you have higher prices, and it breaks in large part that high prices is the cure for high prices. It may not be, or it may be significantly deferred from what it normally has been.
And then I'll just jump in on that. So there's also, that's the supply side. On the demand side, like Kuppy was saying, these energy stimuluses and subsidies and tax cuts affect things. So usually things, they stabilize both with higher supply as well as reduced demand. And so as incremental supply isn't showing up or isn't showing up in a material quantity, demand is also not falling. Everyone keeps forecasting oil demand destruction, and we're seeing crack spreads that are at the widest. I think they might be the widest ever, not on an inflation-adjusted basis, but on just an absolute dollar basis. So demand is strong, and demand is strong partly because there are these subsidies. So the subsidies help. The reality of really underpriced hydrocarbons and underpriced energy versus other aspects of the economy that have inflated materially, like housing and certain other inputs that we've just gotten used to. So I think there's this sort of stimulated demand along with restricted supply, and it's both the supply and the demand that you guys are both talking about that really, I think, is setting this up. And everyone keeps expecting it to be so short. And the interesting thing is that sentiment towards a short cycle and just expecting deflation, that being everyone's baseline, is fantastic for this setup from a multi-year perspective too, because it's restricting investment. And so there's a certain amount of circularity where the longer things were bad, the longer things get good again. It's almost biblical with the sort of like 7 years of famine, 7 years of feast sort of thing. And people have a lot of trouble accepting that. They have this sort of this trigger of, hey, price is high relative to where it was, therefore it's going to go down. And we know that that's not true for many other industries, for many other sorts of businesses. And so I think the assertion, the hypothesis is that that's not true for oil and gas and other energy-related commodities, as well as other parts of this sort of industrial complex.